today's lecture we'll talk about the ascending and descending triangles, right? So most especially with in pattern in chart patterns we have continuation pattern, we have neutral pattern, we have reversal pattern. There are some patterns you see in the market that tends to be a reversal. There are some patterns you see in the market that tend to be a continuation. There's also a pattern you see in the market that tends to be a retracement, a neutral pattern. So these ascending and descending triangles are more like a neutral pattern. So with a descending triangle, the downtrend price find a bottom that can't be easily be broken. They find a support area that cannot be broken. But on the highs keep getting lower, getting squeezed in a way that it keeps shrinking down, but still maintains a support zone, still maintains a very high support zone, which the market or the price find it difficult to break, right? So once the market is ready to move, it's either break in upward direction, which is bullish, or either breaks in downward direction, which is what? Bearish. So the same thing applicable to the opposite of it, which is ascending triangle. So the market price finds a top or finds a resistance that is quite strong, and it will find it difficult to break that resistance zone. But the lower of the market, it keep forming what? A higher low, right? The low becomes higher, and the market begins to squeeze in that pattern where where it's going to find a direction, either bullish or bearish. So when the market is ready to move, it's going to move in either direction. So let's take a look at this chart here. The market drastically came down. The market drastically came down from top, being a bearish move is happening. Then it formed a support zone, now formed a higher high, dropped again to that support zone. So it did not break out this support zone. So the market went up again and formed a higher low. So this high is higher than this one too. So the market tends to do what? Maybe hits again here and touch a lower and form a higher low again here, this area. And what happens is under 50-50 probability that the market is going to take any direction, either go back to the previous direction or comes back towards and continue the previous direction. The same thing applicable to ascending triangle. Market comes up and hits a resistance area, come back, form a support area, which is lower high, then go back to that resistance zone, forms what? Another higher low. Yes, sorry, forms the lower here gets higher, lower high again. Say lower low, lower high, something like that. And we have a high density of 50-50 percentage that probability that market is going to go back to the upward direction or continue a downward direction. So if you're going to draw this kind of trade this kind of triangular patterns, these ascending or descending triangular patterns, we'll have a support zone, then we'll have a trend line being drawn, targeting what? The 2 points or 3 points of triangle. So I'm going to show you this on an actual chart so you understand what I mean by ascending and descending triangle. So let's move to a target. If you want to trade this kind of triangle, let's see what you need to do before you begin to trade such triangle. And this thing appears in so many charts, right? It appears in so many charts. So let's move to the next one. So we talk about ascending and descending triangle formation with the traditional target. Now, if you are trading this, you may have a 2-to-1 risk-reward ratio, which you have the 1 ratio should be your stop loss, and the 2 ratio will be double of the entry or double of the stop loss you placed, right? In either direction. Now, these things are under probability. So if you want to place this, you measure from this area where the market begins to form that high. If you place your line here and your trend line here, under your trend line here, or a channel, right? Now, or we call this, sometimes we call it a rising wedge or falling wedge, but this is not it, right? This is not it. This is not it. So you measure from this area to this area. If this place gives you like 70 to 80 pips, now when we have a breakout, they have high tendency that market will go that same way it has inside this box, inside this channel, right? That's what I'm trying to talk about. So if market breaks upside, it's have high tendency of going what? If it's 70 pips here, the market has tendency of going 70 pips. Then you to come back to mitigate or retest that zone that is being broken and continue. Or in the other sense, we will have a breakout or we call it fake out. Market will tend to break out and fake you out to people that enter, then take out the price above this area, take out the pending orders, take out the liquidity here, and go back down and break downwards and continue their downward trend. This is still similar example of what descending and ascending triangle. This is similar things applicable in this area. So if you are placing this trade, you measure here and here, enter a trade, your stop loss should be below this high. The market moves to that area, the same pips above that area, you take your profit and get out of the market, right? So let's take a look at an actual chart so you understand exactly what I'm trying to talk about, ascending and descending triangle. Now, this is it about what a descending triangle and a breakout, right? Take a look, the market has a drastic move upward move. Now, the market dropped, formed a high, which is a resistance, dropped down here and formed a support. Now, if you take a look at here, this support area, find it very difficult to break out, and the highs are becoming lower. So higher, low, higher, low, higher, low. You see that? So the market forms high, forms a support zone. Market forms again a higher low. Then what happens? They came down and did not break out this support zone. It still maintain this zone, maintain this price, which is, we call it, if you see this in a market or a chart, we call it a strong zone, more like a strong zone, and waiting for breakout. Then it went up again to form a resistance zone, which is another higher low again. Take a look. This high is low, this high is higher than this, and this one is higher than this. So now a breakout came in, market broke out to this area, and what continued downward trend. So if you are entering this trade, you target, even if it's your pending order here or sell limit here or so, you have to measure from this zone to this zone. If this gives you 50 pips or 100 pips or 30 pips, which is 15 minutes time frame, give you 50 pips or 40 pips, you measure from here to here 40 pips and take your profit. See that? So what happens? Market took this out, trend to that zone, then went back to this zone again, and this should be a fundamental. That is this is it about descending triangle formation. Let's take a look at ascending triangle formation. Markets coming what? But if we talk about descending, market is coming from downward, upward, and that is that. Then ascending triangle formation, market is coming from downward. Now it comes down, form a support, went back up, maintain a resistance area, drop down, the low is becoming higher now. There's lower high. This is low, low. This is higher low. So you can use your trend line to measure this area. And this resistance area is very difficult for markets to break, right? So if you see this kind of trend in the market, then they have a high tendency that markets may go downward or continue upward, because this is a neutral pattern, right? We call it a neutral pattern. Now, when the market breaks out, we have this kind of, see this move from here to here, measure how many pips. And if you take this pips from here to here and measure from here to this price that this price is, you see that it's similar from this place to this place. It's similar things to from here to here. So here to here may give you like 80 pips. Probably as an assumption, may give you 80 pips. From here, this breakout area to this zone may give you also 80 pips, because you can see how the price moved. And as it moves, we'll have a high tendency of markets coming back to what mitigates this zone or mitigate this swing here or on another block in this zone, right? So that is that about ascending and descending triangular formation on a neutral chart. All right, thank you and bye for now. Don't forget to like, subscribe, and share this video.